a friend yesterday and he's like, why do we live here? Like, well, everything's out there.
Okay, well, it's 8:01. Let's go ahead and get started. Hi, everyone. I'm Karen Linthicum with the Maricopa Small Business Development Center. Today, we are having our second rendition of Quickbooks class. It's a continuation from yesterday. I do want to tell you that we had some technical problems yesterday. If that happens in this class today, go ahead and just get right back on. I will restart it immediately. And also, Tanya Lucan has shared some more information that I'm going to be emailing out. I want to make sure that everyone who is in yesterday's class gets it, as well as today's class. So you may well get two different emails with the same information. It's just too time consuming to scrub both lists in a timely manner. So I will go ahead and introduce Tanya Lucan, CPA PC. And she is going to be teaching you some amazing stuff about QuickBooks and how it can help your business. Tanya, over to you.
Thanks. Good morning, everyone. So like Karen said, my name is Tanya, and I've been helping small business owners with their accounting for years. Today, let's use the Q&A. If you have questions, feel free to ask questions throughout. There's time allowed. There's a couple of things that we talked about yesterday that I just want to touch on and give you some information, just kind of clarify a few points about some things that came in at the end. So hopefully you should all be able to see that. Give me 2 seconds. I'm going to share that one more time because there's sound later. I know, right? Such a teaser. Okay, so this is what Karen's going to send you, this little Word document. So the point of this course is to kind of give you an idea of like, hey, QuickBooks Online can do all these things. And while it's like, there is a student guide that you all should have received as well, this one. So while the student guide roughly follows, like the topics are the same in the student guide versus the presentation, I thought it was the way that it was laid out in the student guide didn't flow. It didn't make sense to me because it was having you do things like on page 4 that they didn't talk about until page 50. So, so I rearranged the slides to make it an easier workflow, what I felt like was more understandable. But the student guide section is divided into roughly the same topics that we cover. So like how to navigate around QuickBooks, which we beat to a dead horse yesterday when we talked about the list menus and the gear icon and the plus new button and things like that. The chart of accounts here, the vendors and expense transactions here. Time tracking, we're going to talk about today, but at the very end, because it's something that doesn't apply to everyone. Customers and sales transactions, we're going to talk about first. Payroll, we're going to talk about this afternoon, well, or like at the end as well, because again, payroll doesn't apply to everyone. And then bank and credit card transactions, we're going to talk about second today. So the guide does kind of follow the same, the same things are in there. It's just on a different layout. The other thing is I don't think Intuit has spent a lot of time updating the guide. So remember what I said yesterday is that if you want to know how to do something, so if you want to know how to do something in QuickBooks, you just Google it, and just like you would ask a question to a normal human, and it'll give you usually like 9 times out of 10 the answer. So sometimes there's some weird phrasing. Feel free to email me if you're like, I can't find this on Google. So the student guide is there to help. Remember about Google. There's some links at the back of the slides that you'll get as well that have some things too. But this is what Karen's going to send you today. So if you're new to QuickBooks, watch this 3-minute video about how to, how QuickBooks works. Then connect your bank accounts and watch this 2-minute video, and then go into doing all of these things. So, and they're just little 3 to 5 minute videos that'll give you some more information about, like, you can pause the video, do it, start it again, pause the video, start it again. Then there's some other kind of things that really I feel like are kind of fancy and easy to use. Like there's a mileage portion, which if there's time at the end, I'll log in on my phone and show you how to do that. Then there's keyboard shortcuts for those of you where you're talking about, the T for the today and the Y for the first of the year and R for end of the year. And then there's some more keyboard shortcuts about how to open different windows. So she's going to send this out. Hopefully it'll be helpful for you. But I wanted to talk about that real quick. The other thing I wanted to talk about is the different levels of QuickBooks. There was a lot of questions about which one should I buy. So unless you have a specific need for some feature that is in one of those like more expensive versions of QuickBooks, just buy the lowest one. And then because you can always upgrade, you can always downgrade as well, but just buy the lowest one. And then if you're like, man, I really need it to do this, and that's in the next version, then you can bump up a level. So try that as well. So, all right. Customers and sales. One other thing, I did open the sample company. And for those of you that weren't here yesterday, I made some modifications in the sample company. I can never remember where it is. So I made our website person put it on our website. You can also just Google QuickBooks Online sample company or QuickBooks Online demo company, things like that. So, but this is the sample company. It's Craig's Landscape and Design, I think is what it's called. Yep, Craig's Design and Landscape Company. So we're going to work within this one today. And then the other thing I did is I turned on location and class tracking, which is a way to track your revenue and expenses. It's to subdivide them a little bit more. We talked about it at the very end yesterday. So if you missed it, we're going to talk about it again a little bit today. But it's a way to say, like, if you have multiple locations, for example, you can run reports based on location, which will be really nice. We'll talk about reporting today. And then in accounting speak, we like to call them revenue centers and cost centers, meaning that revenue centers are locations or places or things that generate you revenue, and you need to divide them into something meaningful. Locations have a one-to-one relationship with the transaction. So when you're looking in, well, that's not how, oh, there it goes. When you're recording a transaction, everything in this gray bar at the top is a one-to-one relationship, meaning that whatever you put in this gray bar, that's it. That's all that can go there. Anything that goes in down here in all of these items, you can pick multiple classes here. So you can have something for $100 that's for the first class, whatever that might be. And you can have something for $2,400 that's for class 2. So you can divide things down here, but you're limited to only one location at the top. You can't pick more than one location. So this $2,500 transaction can only have one location, but it could have multiple classes and near unlimited classes. I just happened to pick 2. So, okay, so keep that in mind. Just a little bit about what we talked about yesterday. Okay, so customers and sales. So in this section, we're going to talk about how you create a customer, how you use QuickBooks Online to record your revenue, how to determine the appropriate sales related settings, recognize options for entering sales transactions, because if you might remember from yesterday, there's about 1,500 places to get to go in QuickBooks to get to the same thing, and then recognize the features of online invoices. So we're going to talk about all of those. So here's my demo company. Remember, like, we use our gear icon when we have to do something difficult. So our products and services list is here. These are the things that we sell. And then here on the left in our navigation bar, this is our sales kind of overview center. So if we go to the overview, I'll just walk you through this one. The sales overview, some people like these things. I personally like, excuse me, it's fine for some, but because again, I learned QuickBooks 20 years ago, I just know to go somewhere else to get this information. So if you like these, by all means, I think they're great. If you want to set up online payments, this is where you would start. Okay, so if you wanted to use, we'll talk about QuickBooks Payments again, but if you wanted to use QuickBooks Payments as your merchant processor to accept credit card and ACH payments when you email invoices to people, to your clients or customers, you would be able to set that up there. There's some keyboard shortcuts or shortcuts here, some icons, and then it shows you your invoices over time. You can run comparisons. There's an all sales tabs, which is similar to the all expense tab that we looked at late yesterday. So this gives us all of our invoices, all of our refunds, our time charges, our payments, our sales receipts. So this is all of our sales, all of our revenue and customer transactions all in one place. I find this list overwhelming and don't really use it either. So it's giving you unbilled activity. It's showing you can click on these and filter what's happening at the bottom. So there's 10 overdue invoices. There's 20 open invoices, and there's 12 paid invoices. Then you can see your invoice list. For example, you can look at all the ones that are overdue. Here's your customer list, which we're going to come back to in just a second. So all of your customers are here. It looks the same as the vendor list. Products and service list. So again, these are the things that you sell, and there's 4 types, remember. We talked about inventory items, non-inventory items, services, and bundles. Okay, so back to your customers. So if we wanted to create a new customer, we would come into our customer list and we would click new customer. And of course, I'm going to use my office mate here. And ordinarily, you could not have the same name as a customer and a vendor. You would have to differentiate between the two. But because it's a sample company, when I closed it yesterday, all of us adding Barbara Gordon, who, for those of you that were here, this is my dog, Barbara Gordon. Me adding her yesterday as a vendor is now gone out of the QuickBooks. But otherwise, you wouldn't be able to do it. Okay, so you put in your customer name, their company name, a display name, phone number, any of the other pertinent information that you want. If you wanted to make it a sub-customer, meaning that you wanted to have a parent-child relationship. So let's say that you, if you're a contractor, for example, and someone hires you to remodel or build them a porch, you could have the name of whoever the customer is, and you could create a sub-customer for the porch, and then you could create a sub-customer if they call you back to do their kitchen, for example. So there's some things there. You would add their address, and then if they have a different shipping address, you could put it in. And if you wanted to add a note about some special pricing or some things that they want, if you could put that they're particular about something, you could add all kinds of notes there. You can add attachments. If you have a contract with them, for example, this is an excellent place to add that attachment. The primary method to talk to them, or how they would want to pay you. So you could pick their Visa card. You could set their terms of when their invoices are due. In the additional information, you can pick a customer type. So briefly yesterday, I mentioned that I used to work with a record label, and the record label would have, they have retail customers, wholesale customers, and distributors. So wholesale customers to them would be essentially like a record store that would buy in bulk from the label. And retail customers would mean people like you and me that just go on their website and would order an album or something. And then distributors are large companies that would then, like Apple Music, for example, is a distributor. So there's different pricing levels for those customers. So I have other customers that have that same kind of relationship. This is our retail price. This is our wholesale price. This is our distributor price. So you could set up customer types within QuickBooks for a retail, wholesale, distributor. So if you have people that have like 10% off list or 25% off retail or whatever, you could create all of those things here. And then if they're exempt from sales tax, so this is part of the sales tax setup. So if you have a customer that is exempt from sales tax for whatever reason, you would put that this, you would uncheck this box and you would put why they're exempt. So you would say that, oh, they're a resale customer, meaning that they're going to buy whatever you sell. You're going to sell them something, they're going to resell it. And so it's their job to collect the sales tax. This opening balance equity, I very rarely ever use, again, because I don't like it. If you ever feel the need to use it, just send me an email and I'll talk you out of it. And then one other thing that they did on invoices is you can select a language. So if you need to send invoices in Spanish, for example, you can do that. I'm not sure how good, I haven't had a need to use it yet. And I've actually set a goal to try to become fluent in Spanish. So I try to practice my Spanish a lot. So usually if I need to translate something into Spanish, I just do it with my, like, you know, 4th grade knowledge level. So, okay, questions on that? You guys can send me questions in the Q&A. So, okay. All right, I'm going to save my customer. And then, so she's set up here. When you're in your customer list, remember too that you can pick one and the list kind of goes away. But if you expand it here with these 3 little bars, it'll come back and then you can see all the things underneath it. Do you see how this Barnett design is kind of like indented over to the side? This Barnett design is a sub customer of Sahara Bennett or Barnett. So, okay. Okay, so Francisca's asking about printing invoices. I'm going to hold on to that one for just a minute. And Daphne, yes, it is recorded and it'll be on the SBDC's. What's the YouTubes? And we're going to talk about deposits later as well, Chris, when we get there. So, okay, awesome. All right. Okay, so we talked about the sales center. And okay, so let's talk about sales receipts. All right, so there's 2 ways that there's 2 ways to put revenue into QuickBooks, okay? So there's a few ways actually. You could just record all of your bank deposits as sales, which is fine. So if you have a way to track when people pay you, or you're not, you don't want to send out invoices, all of those things are fine. You can just record your bank deposits to sales, provided that you make sure if you ever had to put money into the bank because your bank account was running a little low, that you would then don't count that as revenue, okay? But if you, for those of you that want to be a little bit more savvy and track like what you're getting, like why you're getting paid from your customers, and track, you know, how is this thing that I sell, like how does those sales compare to this other thing? You know, I sell widget 1 and widget 2, and which one sells better and why do they sell better? Those kind of things. If you want to track that, there's a way to do that within QuickBooks. Leah, yes, if you put money into your company, that's members equity. So there's an invoice and a receive payment, and I'm going to open an invoice on this screen. Maybe not. Let's see if it opens on this one. There we go. Okay. And then there's a receive payment. So I'm going to see if I can make that one work on the screen. So the difference between an invoice and a receive payment, I don't know why this thing is being weird, but is when you have the money. So think about this, like you walk into the grocery store and you buy something and they hand you a receipt, okay? So when you're looking at, sorry, and it's a sales receipt. So when you're looking at a sales receipt versus an invoice, the difference is between the two is that one of them, you have the cash right now. You already have the money from your customer or your client or whoever. So you have the cash, you have the money, and you need to record, I sold this thing or someone gave me this money for this reason, and I need to make a bank deposit, okay? The difference between an invoice and a sales receipt is with an invoice, you're going to say, so-and-so owes me money, and I'm going to collect it at a future date. So we're going to do the invoice first. So I'm going to use my new customer, Barbara Gordon, and what fills at the top is their invoice, or sorry, their email. And then there'll be options over here. If you do choose to create, to set up with QuickBooks Online Payments, you can turn it on to send them a link to get paid from here. The terms are, when is it due? So if I invoice her today on February 23rd, it's going to be due on March 25th, 30 days from now. If I want it faster, I can say it's due in 10 days or it's due on receipt, any of those things. My location is going to fill here because I turned on location tracking. So we'll add that. And then I have to sell her something. So we're going to sell her some landscape design services. And we spent 10 hours at $50 an hour doing that. And we sold it from our wholesale division. And then we're going to sell her a fountain, and that's taxable. And we sold that from our wholesale division as well. So 2 seconds, because I'm going to take a picture of this so I remember what I did for when we do our sales receipt. Okay. All right. So does this, are you with me so far? So these products and services are what we set up yesterday. So these are what are you selling? How much are you selling? What are you selling it at? Is it taxable? And then the location and class tracking is separate. If you want to, you can turn that on. If you want to apply a discount, this is also where you could apply a discount value, meaning like I'm going to give her $10 off, or you can do it as a discount percentage and give 10% off. Okay. Your sales tax rates are here. So if you wanted to manually pick the sales tax rates, you can. What happens with QuickBooks and sales tax is that it's automatically going to calculate it for you based on the billing address, the shipping address, and your location. Okay. The reason that you want to be careful with QuickBooks sales tax is because, like, I have clients, for example, that have the company has a billing address in Florida, but they happen to do the work in Arizona for the Arizona branch, but the billing address just happens to be in Florida. And QuickBooks seems to think that my client should collect sales tax in Florida, even though he's selling it to someone that's physically standing in front of him in Arizona. So be careful with QuickBooks sales tax. Like, I don't love it. I'm just going to tell you, it's a nightmare. I feel like Intuit could do better. So, okay. The couple other things, when you're doing these, if you want to, you can add a subtotal, which is kind of nice. So if you're doing like, here's your fountain, here's your sprinkler irrigation, you can then create subtotals throughout your invoice, which is kind of nice. So these, if you collected deposits from customers, you could turn that feature on as well. And then there would be a deposit box here that would show how much you collected in the deposit previously. Okay, let me answer some of these questions. So Chris, we're going to talk about deposits some more, but the tags, you can use a tag on an invoice. You can use tags on any transaction. If you wanted to, like I talked about yesterday, we used it personally, like for our clients, we used it to track expenses that were related to the PPP. We used it to track one-time expenses that were related to COVID, just generically. I have clients as well that are looking to sell their businesses. And so we track owner discretionary expenses. Like if my client were to go out and buy a Bentley, for example, and the maintenance was really expensive, we would track that as an owner expense. We would tag it that way so then we could report on it later. These, if you were to tag this invoice with more than one tag, so let's say I tagged it with an owner expense and a PPP expense, which would never happen in real life. But let's say that I did that and I tagged them both. When I ran reports later, it's going to show me the same $700 in both tags. So it doesn't kind of track that way. So just be aware of that because it's a one-to-one relationship. But if you add multiple tags, then it's still a one-to-one relationship for each tag that you add. And if your sales tax does go kaflooey, you can, there's a link down here when you're doing the invoice that you go in and you say, no, it needs to be this. And so you can override it here. But the problem is if you're importing or if you have some kind of automation that's built between your point of sale system or an invoicing system and QuickBooks, sometimes that automation, QuickBooks is going to do it for you without you like being in each one to edit it. So we just have to, my client that I was saying about the Florida thing, we import all of his invoices and then we run a report to see where QuickBooks thinks we should have collected sales tax, and then we go in and manually edit those ones where it went off the rates. Okay, if you're discounting the entire invoice amount, does it count as revenue coming in even if no money is exchanged? So Amanda, yes, you could discount 100% of it if you needed to, absolutely. So, and it would show as so my subtotal here is $775. So your financial statements would show I had revenue of $775, and then I have negative discounts of $775. So technically, yes, it's still revenue. And if you are discounting things a lot, you might want to track it that way because it would help you determine how much you're giving away. I have a client that's a brewery and I feel like they're giving way too much away. It's like 13%, which is hundreds of thousands of dollars a year. And so every week I'm telling them like, hey, we gave away 12% this week, or we gave away 18% this week, because I think it's a big deal how much they give away, because it's so easy in the restaurant industry to just be like, oh, let me just comp that for you. And then someone asked, I receive online payments from an online marketplace. Do I report them on a sales receipt? So remember that we're going to talk about that in a minute. But so hold on to that question. Okay, so Francisca, back to yours. She said, our company needs to print invoices on the go, so we purchased a portable printer. I know other people that have the same setup with QuickBooks invoicing. I ran into a problem with mine because I don't have a print button when I create an invoice. Could I have done something wrong? So the print button is down here in this black bar at the bottom. So you would go print or preview, and it's going to save your invoice. And then in theory, it would load. And then from here, you would hit print. Oh, look, it's in Spanish. Nice. Okay, sorry, I forgot that I made Barbara Gordon's invoices in Spanish. So you can print it from here, and then in theory, Francisca, you would be able to. It should open this kind of PDF thing, and then you can print from there. The one thing that I would tell you that might be easier for you is to collect your customers' emails. And if you're on the go, get a tablet and then use the app on your phone. Let's see if I can find it. There's a QuickBooks app. So then use the app on your phone or the app on the tablets and just email the invoice instead of physically printing them when you're there. That might be an option as well. And then you have emails for marketing purposes. But okay, so we've made our invoice. I'm going to save and close this, and we're going to talk about deposits. So let's say, remember my invoice is, I'm owed money from Barbara Gordon. Oh, you know what? And let me take off. I'm going to take off that discount because there is 100% discount on it. So there's this little time clock here. If I click on this one, it'll show me my recent invoices. So I'm going to go in and remove that. I'm going to make this discount just 10%. So she owes us some money. So when you're doing an invoice is, I'm owed money from someone that I'm going to collect at a later date. Okay. When you're looking at your invoice, all of this information at the top that we talked about, it's very similar to what's going to happen on a sales receipt. So here's a sales receipt. And when you're looking at them side by side, they look remarkably similar. Here's my customer, here's my email, my billing address, my terms. There's no terms, invoice date, or due date on the sales receipt because you already have the money. So you're not telling someone, hey, you have to pay me in 30 days because you already have the cash or Visa or whatever, like cash generically, money. The tags are still here, but then these boxes are added. So there's a payment method. So then we would say, oh, we have a Visa payment, and this was the authorization number kind of thing. Okay. So keep that in mind that that's the difference between an invoice and a sales receipt, is that sales receipts, you have the money at the same time you're recording what you sold. Okay, so we sold to Barbara Gordon. Okay, so we're going to make today the sales receipt. We'll sell it from location 1. And she paid us with the Visa. This was the reference number when we ran her credit card. And then this box shows up that says deposit to undeposited funds. So this box, it gives you an option of undeposited funds, your checking account or your savings account, because you can't make bank deposits against your credit cards, for example. So that's why it's only giving you your bank accounts here. Undeposited funds is what you would use. It's a little bit old school, and I feel like it's kind of it's going away because we're all banking on our phone. But for example, it was money day for me, and so I got these checks from my clients. I love it because like there's one day a month where like all the money shows up. So what happens is in like, you know, a couple of years ago, I would have endorsed all the checks and then taken them to the bank. And even though I had 2 or 3 checks, I would have done one bank deposit. So undeposited funds is a way to say, like, I have multiple checks or multiple transact batches in my multiple credit cards in my Visa batch or in my credit card batch that you're going to take to the bank. But right now, what we usually do is we deposit them one at a time with our phone, right? So in that instance, what undeposited funds does is it makes it so that you can say, I got money from multiple people and I'm making one bank deposit. So here we're going to put it to undeposited funds because Barbara Gordon paid us with her Visa card, but she's not the only person that paid us that day. And then we're going to go in and sell her some landscaping installation services again. And I'm going to make it the same as the last one. And then we're going to sell her a rock fountain. All right. Actually, I'm going to make this one. Oops. I'm going to make this one class 2. And then we'll give her a 10% discount because she's so cute. And we'll charge her California sales tax. Okay. So sorry, that was I closed my little snippet window. Okay, so now we've done our sales receipt. So remember, a sales receipt is she's already paid us and we need to record the revenue. So what's going to happen now is when you go to look at, and we're going to talk about reports later, but when I go to look at my reports for the month, I'm going to see the sales that I did for her. And I'm just whizzing through this because I wanted to show you. So here's our discounts that we've given, right? And if I click on this, it'll open it up and show me the 2 discounts that I gave to Barbara Gordon. So Amanda, there's a way that you could see the discounts that you've given on the invoices that you create on your financial statements. So you can see it there. You can also run a report on the discount product or service from the product or service list. And I'll show you that in a minute. So here's our installation. Here's our sale of product income. And if I go into here, I'm going to see the 2 rock fountains that I sold Barbara Gordon. So right now, our sales for the month are $13.95, but I want to show you something. If I run this report slightly differently, now it's only $697. because I'm trying, like, I changed it to a cash basis, meaning show me how much cash I actually collected so far. And it's only showing me the 697. The 697 is showing up because that was the sales receipt. So if you have the money right now and you need to record the revenue, it's a sales receipt. If you're going to get the money in the future, then you create an invoice and then you apply a payment to it. So let's finish that off. So you remember we did our invoice for Barbara Gordon, right? And so she owes us this money. And it's not paid because otherwise it would be March paid. So what can happen is when she pays us, we're going to go to receive payment. So invoicing is always a two-step process. You say, I'm going to create my invoice, and then I have to go and mark it paid. So when Barbara Gordon pays us, let's say she pays us at the end of March, and she's going to pay us with a check this time. Actually, we're going to make her use her MasterCard. And we'll put in the approval number, and we're going to put it to undeposited funds. And then it's going to ask us how much money did she pay us. And so we're going to say $717.30. And then what happens is once I push tab or enter, it's going to automatically mark her invoice here. Here's her open invoice. It's going to mark her invoice that she was paid. Let's say she messes up and only pays us $700. It's going to show, it's only going to mark $700 paid, and it's going to leave the $17.30 as open for later. So, okay. All right, so we're going to make this $717.30. And then for giggles, I'm going to change this payment date to today because I want to show you how undeposited funds work. So I'm going to save and close this. And then, so now it's today, and Barbara Gordon paid us for one installation. Let's say she's a, monopoly money lord and owns a bunch of properties. So she paid us to install a fountain at one place and install a fountain at a different place. We invoiced her for one and we did a sales receipt for the other, but she paid us both on the same day, one with her Visa card, one with her MasterCard. So you have two payments that you need to record. So what happens is you have two sets of money going into the bank at the same time. So if I go to make bank deposit, because I picked undeposited funds on those two transactions, they're right here. So it allows me to say, I got this $700 and this $700, and I'm making one $1,400 bank deposit. So you can take multiple checks from your clients and add them up into one bank deposit. So you would do this if you were receiving any kind of batch payments. So, and what I mean by batch payments is like if you have multiple people paying you, it's usually only credit cards or electronic payments. So if you're getting paid by credit card or with electronic payments, you can have multiple people paying you every day, but you only get one bank deposit. So if you own a retail store, like someone asked about online payments from an online marketplace, I would do those as a sales receipt because by the time you're recording the revenue, you're getting the cash, unless there's a lag. And I don't mean a lag like I'm going to process the credit card today on Thursday and it's not going to show as a bank deposit until Monday. I mean, like if there's a serious lag, like it's, you have the meaning that your online marketplace for whatever reason will do a sale today, but they're not going to pay you until April, for example. Like Google Play and iTunes, if you were to sell your app on their platforms, for example, they pay out once a month. So what happens is anyone that downloads the app in February, for example, you get a report sometime about the mid-March that says, here's how many people downloaded the app in February, but they're not going to pay you until April. So in that instance, I would do an invoice with a February date for all the apps that we sold to iTunes or Google. And then I would mark it as paid when the money came in April. Okay. All right. There's some other things in here, so you could check off any other payments that you got. you would pick your bank deposit. In this one, it's now giving you an option because in some instances you can do deposits against, you can do deposits to your credit cards. But usually the money goes into your checking account. You pick what day it's going into your checking account, and then you add it here. For those of you that use things like Stripe or Square or PayPal where there's a fee, so let's say we process these with a fee, you would, and you know how you could get $100 sale, but you're only going to get about $98 in your bank account? What you would do is you would record the sales receipt or invoice at the full price, at the $100. And then you would come in here and you would put in your this thing is so annoying that they did this. You would put in your bank charges, and then you would put in your $2 that they're going to charge you. So you would record your PayPal, your Stripe, your merchant processing fees kind of here if they come out of your deposit total. So you want to record that, like, hey, we got $3,400 worth of revenue, but we had to pay $2 in fees. And this is just a little bit of a cleaner way to do it. If you get stuck, there's tons of videos online about how to record, where to put the fees, but you would just add them to the deposit bottom here. Okay, so bank deposits, undeposited funds, invoices, and sales receipts are in all versions of QuickBooks. They should be in all versions. And then how do you mark a check payment as paid? I can't get the payment to reconcile with the invoice, so some of my invoices are sitting as unpaid. So I'm gonna save this. So that's the other thing is when you're doing, so let's say that you've created your invoices and you created an invoice for $700 and the money came in, but someone paid it with PayPal or Square or Stripe. And so instead of you getting $700, you got $692. So what happens is QuickBooks isn't going to know that that bank deposit goes with that invoice because the dollar amounts are different. Okay. So to mark things as paid, you would go to receive payments and you would pick your customer. Let me wait for this page to load. Maybe there it goes. You would pick whoever your customer was and it would show their open invoices down here. So remember that so I picked one for Amy's Bird Sanctuary. Let's say that she's going to pay us with PayPal. And I'm going to mark the whole $239 that she owes us as paid because she paid the entire balance on her invoice. So I'm going to mark that she paid us $239. I'm going to put it to undeposited funds. And then when I go to make the bank deposit, that's where I'm going to record the fee. So when I go back to bank deposits, maybe. I feel like sometimes my internet gets shy or something and doesn't want to work in front of people. All right, and then you're going to pick. All right, so this thing is going to be super annoying. So I'm gonna, Nora, I'm sorry, I'm getting sidetracked with answering your question because this has happened twice and I want to make sure you guys know this. So this account here should be everything in your chart of accounts, but QuickBooks is trying to be helpful. And so they're limiting what you can see here. So now I have to click see and add more categories. And then I can type that I'm paying bank charges. And then it will allow me to pick it. So I don't like that at all. And it's super frustrating that they did that. But okay, so I have $239. So they're going to charge me, I'm going to put in -$3 for the fees. And then that's how it would be marked as paid. So Nora, what you want to watch for is if they paid you with a check, you could absolutely just pick check as their payment method as well. But you would want to make sure that if you have an open invoice, that you're marking them as paid and that you're making sure that if your bank deposit includes multiple payments from customers, you're picking undeposited funds when you mark those invoices as paid on the received payments, and then you're grouping those together into a bank deposit that matches how much money you got from the bank. Okay. So Tanya asked if all these steps are necessary if you have your bank account linked to QuickBooks. So Tanya, the reason that you would do invoices and sales receipts, you would do invoices if you needed to track who owed you money. Because like me, for example, we send out invoices at the start of the month for the prior month's work, and then I need to know who's paid me and who hasn't. It's less important if I were to own a retail store or a bar or a restaurant, I'm going to collect all my money that day. So it's less important in those instances to do it this way. I still think it's important to track what you're selling and how much of each thing you're selling. So I'm going to leave your question there for a minute as well, because when we talk about reports, you'll see why you would want to. There's a lot of sales reports that are available for things that will show you like what you sold and how much you sold and things like that. Okay, let's talk about customer deposits. So if a customer pays you in advance for work that you're going to do in the future, there is an option within QuickBooks to turn on that you collect deposits. And it's bashful. It just doesn't want to load today. Okay, so in your sales tab, there is a deposit here. Oops, got a little crazy with my highlighting. So I'm going to turn this on. So Chris, to answer your question, you can turn on your deposits here. And what happens is when you go to your sales receipt or to your invoice, it's going to have the deposit on the, oh, it's not going to do it there. Sorry, sometimes in the demo versions, like they tell you it does things and then it doesn't do things. Let's try it here. Okay, so added the deposit here. So you can put your deposit amount here. The problem is that when you do this as a deposit, it only records that it was paid. So this is where you would apply the part that was paid. And you would collect, you would have to make a deposit item up here. So what I like to do is set it up as a service item because it's technically not revenue. It's not, sorry, it's not inventory. It's not a non-inventory part and it's not a bundle. So you could say deposit for future services. And then I also like to make it track to a customer deposit liability, which I don't have a customer deposit liability in this QuickBooks because technically, well, with my accountant hat again, technically when you collect money from a customer, you owe them the work or the money back. Not always are deposits. Some deposits are non-refundable, but a lot of times they are. If you don't end up providing the work, you will return the deposit. So there's a customer deposit liability. I like doing it with a customer deposit liability account better than with the dumb little deposit box. And I mean that in the nicest way. So, all right, we're going to have, and I set it up wrong, so it was taxable, so I'm going to check the box, but let's say we collect $1,000 deposit and we'll collect one from Amy's Bird Sanctuary. Okay. Oops. So I'm going to collect $1,000 deposit from Amy's Bird Sanctuary, and I'm just going to save and make a new one because we're going to fast forward 30 days in the future. And now we're done doing the work for Amy. And so we're going to make her an invoice. And we're going to say, we are going to add some time to this. And we're going to say we did some installation of things for 150 hours. And so now she owes us $7,800, and we're going to put her deposit here as negative $1,000. So I like to do it this way, where it's just a line item. So on the first invoice or sales receipt, you invoice for a deposit for however much you're collecting. Then when you're finished, and you could do like, even if you did like 4 or 5 invoices for deposits, that's fine. On the very last one, the last time you're ever going to collect money or give a receipt or an invoice to that customer, you're going to invoice for 100% of the job, and then you're going to put deposit minus $1,000, deposit minus however much, or however many deposits that you collected. When you do it like this, it's nice because it lets you run a report on it. So I'm going to go. We're going to cover reports in a minute, I promise. All right, so here's my customer deposit liability account. What I can do is I can run a report on it, and then it's going to tell me that, like, oh, hey, I collected $1,000 and now I invoiced her for $1,000. So it's going to show me I don't have any deposits available to apply for any future work. So that's why I like that, because it tracks all in one place right there on the face of your financial statements, instead of in a product or service liability, or product or service item, which is what QuickBooks does with that dumb little box. But some people love that little box, and I personally, like, QuickBooks didn't have that box when I learned how to do it, so this is the way, the way that I do it. And there's also plenty of things on YouTube about customer deposits and how to handle them in QuickBooks. So that's what I would do. Okay, let me see. If you take a deposit but do not make an invoice until after the job is complete, how do you avoid QuickBooks flagging those payments as unapplied? So Amanda, you would invoice them for the deposit item. Or I guess in theory, you could just go into your receive payments here, and you could pick your customer. You would pick your customer, but it says we'll save this payment as a credit to your customer account because they don't have any open invoices. So you could make their accounts receivable account negative, and then you can go back into and apply all the payments. But you would have to create one invoice for 100% of the work that you did, then go in and mark the payments against the invoice, the previous payments against the new invoice that you made, and then you would have to send them an invoice that showed the net amount that was due. Otherwise they could end up paying the 100% of it again, or be like, why did you invoice me for 10 grand? I've already given you 8, kind of thing. Okay, and then Amanda says we use Jobber, everything's done through there and then synced over to QuickBooks. Yeah, so Jobber syncs to QuickBooks in kind of a weird way. I have a couple clients that use it, and but yes, you can do it that way. A lot of times when you do sync with software and you collect a deposit, like in that kind of contracting space, like I have a client that's an HVAC company, I have clients that are chimney sweeps that use Jobber, for example. What it will do is it'll record a payment against their, so just like the screen we're looking at, it'll record a payment without any invoice to it, which is fine. It's not the best, but it's fine. It works. It totally works. So there's nothing wrong with it. So, all right, more questions on sales receipts and invoices and bank deposits. Okay. So you create an invoice if you're going to collect the money in the future. If you're telling someone, hey, you owe me money, you receive a payment for it. A sales receipt is if you have the money right now and you're also wanting to record what you sold. An estimate, just to look at these, an estimate is if you're going to do future work, you would create an estimate for someone, and then you could send it to them that says, here's what we think it's going to cost. There is a way to change these estimates. So they're not called estimates. They're called, like sales orders, or, you can change the name on them as well. And it looks exactly the same as all the other things that we've been looking at. So if you do create estimates and the customer says, okay, I'm ready to go, then you can change your estimates. You can convert them from an estimate into an invoice. You can't go from an estimate to a sales receipt though. So just keep that in mind. A credit memo is a negative invoice. So it's, hey, whoops, Barbara Gordon, we shouldn't have charged you for all of that landscaping services. So we're going to credit you for 2 hours worth of work. Because it says it's a credit at the top, the credit memo, it's not a -2, it's just 2. If you try to put in the negative, it'll tell you like, hey, you can't do that. Yeah, so it has to have a dollar amount greater than 0. So, and all of those lines on that, they're all the same. A refund receipt is a negative sales receipt. So it's you're issuing someone a refund at the same time you're recording that they returned something. So this is more, again, like in a retail type situation where I have my invoices, I have all my sales for the day, I refunded one person. So you would pick whatever it was and whatever you sold them. And because it's a refund, it's already a negative number, so you don't do the negative again. Okay. Here, your refund account is asking you where you're going to refund it from, your checking account or your savings account. So keep that in mind also, because a refund receipt is you're giving them money back somehow. So it's asking you how you're doing it. The other thing, these delayed credits and delayed charges. So just to look at them, they look, again, shockingly exactly the same. But what it is it's going to, we have a client that's a landscaping company, and he goes to his customers' homes or businesses like once a week, for example, during the summertime. But he only sends them an invoice every month. So he could come in and say, that he was doing landscaping maintenance at Barbara Gordon's house on the 2nd. And then he's going to come back to Barbara Gordon's house. And he's going to come on the 9th and do maintenance on the 9th. And then he's going to come today. And then, oops. So he's come 3 times to Barbara Gordon's house. Oh, this is a terrible example. Why didn't you guys tell me they were $0? All right, hold on. Let me go fix it. And remember, because I just messed it up, like if I go to my little search icon, it's going to pull up those charges, right? So I can go in and just edit them super quick. And one more. Almost. Okay. So then let's say that we've entered our delayed charges at the end of every workday. And now we're going to go and we're going to make an invoice and tell Barbara Gordon that she owes us for the landscape services that we provided to her all month. So when you pick her name, it's going to pop this drawer out from the side that says, hey, you have these delayed charges. So I can add each one of these delayed charges onto her invoice. So this is super handy if you have to keep track of things that you need to build people for in the future. There's other ways to track time, but this is an excellent way to kind of alleviate, because sometimes doing the billing to our clients at the end of the month is a huge pain in the butt, and it's very time consuming. So this is a way that you could do a little bit every day instead of having to do it all at the end of the month. The other thing I want to show you is we talked a little bit about you could customize things. So I'm going to customize this one really quick. And I'm going to add the service date, because if you're, so here you can pick a different template, add your logo, change the color, change the font. I'm going to go to content and pick this, and I'm going to include, oh, it hates me. It's going to make a liar out of me. Oh, the date is there. Okay. All right. So now, if I come back to my invoice, I feel like my internet is really bashful today. Sorry, click the wrong button. I'm going to add all of these. And now it shows the service date of when we were there. Okay. So this is super handy. Like if you have things that you need to bill for, but you're not going to bill it all at once, using those delayed charges is an excellent way to do that kind of stuff. Okay, so a couple of things. Nancy asked, do we have to choose the payment method for the customer? No, you don't have to choose a payment method. Sometimes it's really kind of nice though, because then when you get to that make deposit screen, you can be like, oh, that one was PayPal and my bank deposit's going to be different than that one that was Visa or MasterCard. And then Pedro asks, how do I enter my sales tax paid if I'm not using QuickBooks Online to track them? So Pedro, that would depend. When you're recording the money coming in from your customers, if you're recording 100% of the money they gave you as revenue, then sales tax would be an expense to you. If you're recording, I got $108 from someone and $8 is sales tax and $100 is revenue, then you would record the $8 to a liability account showing that you owed the sales tax. Then you would record the payment against the same liability account. So that one was a little bit harder to answer. And yep, internet, everything will be, I don't know if they'll email the link, but it'll be on the SBDC's YouTube channel. So, okay. All right, questions about delayed charges and invoicing. All right. Awesome. Okay, so we talked about sales receipts and invoicing. We received payments. We did credit memos and refunds, delayed charges. We did some bank deposits. We talked about estimates. Let me show you the statements. If you want to make a statement for your customer, sorry, I did that a little too fast. You would go to the plus new button and statements are over here. So most of our customer stuff is all here on the left, but for some reason our statements are over here. So you go to statements and then it's going to ask you a few things. What kind of statement do you want? Your options are a balance forward, any open items, or a transaction statement. So a balance forward is going to say, so for example, if our statement date was today and we wanted our customer open balance from, we're going to do 1/1 to 1/31. The balance forward is going to say something like, let me just show it to you. It's going to say at the end of the month, you owed us this. Here's all your new stuff. So it's going to show the balance forward on 12/31 was $205. And then here's all the things that happened in January. And now you owe us $239. Or your balance is $239. So that's one type of statement. The open item statement is just going to give any items that are open at that moment. It's going to show anything that's open. So here there's 2 invoices for Amy's Bird Sanctuary that are open. Remember, we sent her an invoice for $1,000 for her deposit and then the $6,800 for the balance that was owed. The last one is a transaction statement, and then you just pick what dates you want to see on this for the transactions, and then it just gives you an overview of everything that was owed. This one looks exactly like the balance forward, but it doesn't show the balance forward. It just shows all transactions within that period. what you like, what you want to send. If you want to send them, it's kind of entirely up to you. Because I'm an accountant, I never pay for my statement. So whenever I get a statement, I always say, hey, just send me those invoices. So I just head it off and I send, hey, here's all your open invoices. Where's my money? Right. So, I mean, I say it really politely though. So, okay. Questions about statements? All right. Okay. QuickBooks payments. So you can use QuickBooks Online has a service called QuickBooks Payments. They're a merchant processor. So they would accept Visa, MasterCard, Discover, American Express. It still advertises Diners Club, but I don't know anybody that has a Diners Club card anymore. What QuickBooks Online does, if you use QuickBooks Payments and QuickBooks Online, it will, if someone pays you with the merchant account in QuickBooks Payments, it will automatically mark that transaction, that invoice, as paid in QuickBooks, and then it will put it into undeposited funds. And in most instances, it will create your bank deposit for you as well. So that automation can be very nice if you're very busy. Of course, you might pay a little extra to Intuit to process those payments if you want those features, that service. The other thing about QuickBooks Payments, it allows you to accept ACH payments, meaning that someone can put in their bank account information and have the money come out like an electronic check, which is really nice. The fee it's capped at $10 for those ACH payments. Most of the fees with Intuit, if the customer were to type in their credit card number, you would pay a little less of a rate. You would pay a smaller percentage to Intuit than if you typed in their credit card number. So just keep that in mind, and that's common practice among merchant accounts to do it that way, to have those kind of to have those fees come out, things like that. With Intuit, you have an option as well to have you pay a monthly fee to get a slightly smaller rate, but you should do the algebra on the slightly smaller rate, because when you look at the fees, they might charge you $16 a month to give you a 0.5% discount on the fees, which would mean that you would have to do probably, $32,000 worth of business to cover the $16 fee. So I know most of you might not be fans of algebra, because I have met few people in my life that are fans of algebra, but if you do the math on the algebra, or you do the algebra, I bet that $16 fee is not worth it, and you should just pay the slightly higher rate, depending on how much you're processing credit cards. Okay, so our next topic is bank and credit cards. Do you guys want to take a couple minutes here, and we'll get more coffee and come back at 15 past, and then we'll pick up with bank and credit cards. Sound good? Okay, I'm gonna call it good. All right, ask any questions you want. I'll answer them when we get back, and if not, I will see you in 7 minutes. Leah, we did talk a little bit about merchant processing fees, just kind of generically what to watch for. So just make sure that if you do sign up for QuickBooks Online or QuickBooks Payments, for example, there is a small monthly amount that you can choose, or you can choose to just pay a higher percentage. So just keep that in mind. I think QuickBooks Payments, like we use it for a client that is an HOA, because we don't want to have to match up all of those individual payments with all of those, because every invoice is $187, for example. So, okay, so bank and credit card accounts is what we're going to talk about now. I agree, like it does get expensive, but I also, just as a pet peeve of mine, it irritates me when people charge me a fee to use my credit card. to make the payment. And if you think about it, that's the last part of the transaction most of the time, is they are ready to pay you. And then you say, well, if you want to use your rewards card, then you're going to have to pay me extra money. So when you're setting your pricing and you're determining how you're going to price whatever it is you're going to sell, build in just as a matter of fact that you're going to have to pay 3 to 4% to some company to process your payments for you. It's just a given in this day and age with everybody wanting to pay electronically. Like, it's just not something that, it's just, don't charge them 3%. That drives me bonkers. It's just a pet peeve of mine, but okay. So Tanya asked earlier, I love it that there's multiple people named Tanya. There's even a LaTanya here today. I think all the Tanyas are the coolest ever. But so Tanya asked earlier if all of the steps that we were talking about with sales receipts and invoicing and bank deposits are necessary if you have your bank account linked to QuickBooks. So the short answer is no, all those steps are not necessary. Because you can just go through the bank and credit card feeds and record all of your information. So what I want to show you is that in this section, we're going to talk about how you set up and utilize your bank feeds. We're going to troubleshoot some common bank center issues, and we're going to reconcile transactions to a bank statement using the reconciliation tool. So if you do these things, you're going to get enough of information that you can see, like, am I making money in my business? You're going to have enough information, to determine if you're going to have enough information to file your tax returns. You're going to have enough information to report your sales tax if you have to collect it, all of those things. So you just want to kind of make sure that you're, so you don't have to do all that other stuff that we've been talking about. You can kind of just do a little bit of the kind of generic stuff. And then I did mention this Word document. I'm going to open it here for you. So a lot of what we talk about, Karen's going to email this to you later. So we're going to start here with these two things right now. So this is probably, if you can do these next things, you're going to be okay. You're going to get to where you kind of need to be, and then you can just build on what you know once you get comfortable with these things. So, okay. So QuickBooks Online is designed to link to your bank accounts and to your credit card accounts. There are some banks that do not link, for example, and there's not a lot we can do about it other than tell Intuit, hey, my bank doesn't link yet, because eventually, if enough people tell that bank, like, it needs to work with Intuit and QuickBooks, then they will figure it out. The bank will figure it out. Most banks, like, there's only one bank that I can think of right now that won't do it. And that's First Republic. It's a private bank. And so they have like 15 layers of authentication to get into their bank, and QuickBooks just can't handle that many layers. If you have multi-factor authentication turned on for your banks, which all of you should, you're going to get some connection errors when you go into your bank center. But if you just click the update button, it'll prompt you to put in the code that's coming to your phone or from your authenticator app or your email. Okay, so just keep that in mind. All of you should have that turned on for your banks regardless. So all right, so this is kind of what the bank center looks like. When you have a new account that you want to connect, you would there's a button in the top right here that says link account. You would click that link account button, and it would come to a screen like this that says, okay, where are you banking? So you can check off one of these tiles down below. If it's not there, you can type your bank in here, or you can copy and paste the website that you use when you do log in. You then enter, so let's say we picked Bank of America, you would enter your bank account, the username and password that you use to log into Bank of America, and then it comes up with a screen, then it will download all your data, and it will fall into here, like down here at the bottom, okay? And I'll show you this too in the sample company. If your bank doesn't link, so I was telling you about First Republic, how with all the MFAs that I have with First Republic, I can't get it. What I do is I log into First Republic and I download the transactions into a CSV file, which means comma separated value. It's like an Excel file. And then I can just browse on my computer and I can upload the information from a CSV file into QuickBooks. And then it's still there in that bank dashboard. Okay. So that most banks will link. The one thing that I want you to watch for is PayPal. So with PayPal, there are different types of PayPal accounts. And if you choose to link your PayPal account, that's totally fine. But a lot of times what happens is when you pay something with PayPal, PayPal will go into your checking account and it will suck the money out of your bank account for the same amount, for example. And then what happens is a lot of people, if they've linked their PayPal, they have PayPal included here. They have PayPal included under the PayPal bank feed, and then they have the payment that they made also showing up in their bank account, so that you don't have two expenses. So just be careful there, because you only have one expense, and technically it's a transfer from your checking account to PayPal, and then you paid it from PayPal. So just keep an eye on those. We're going to talk about them because, like being in Nebraska now, I can talk about silos and not feel that I'm, being pretentious. So, all right, the bank flow. So this is your banking tab. And when you come in, this, like I call them bank feeds. So all of your transactions are listed for your accounts below. And I have, sorry, it's giving me nice little tools. I have a checking account linked, a savings account linked, and a MasterCard linked. You remember when we were looking at the chart of accounts yesterday, there was a Visa account that's not linked. So for whatever reason, I chose not to link them. If you have multiple accounts, like more than 4, one more tile would fit here. There would be little arrows to the side to go back and forth to move the tiles over. You can also click this drop down and scroll through the list here. Okay, you can reorder the accounts if you always want to have one thing first and then the next one, however you do it. Your link account is up here. So this is what we talked about. You would click on link account if you wanted to connect a new bank account to QuickBooks. If you click this drop down, you can upload from file. And so that client that I was telling you about that I can't make it link, I upload it from the file. If there's ever an error message in your QuickBooks, like with the multi-factor authentication, for example, there's going to be this big kind of warning like box that says there was a problem with your bank connection, let's fix it. And there'll be a button to click to fix it now. And chances are is it's just going to take you back to this screen where you would log in again with your bank. Okay. So there's some links on this page. Let me make this little, oops. I went to make it bigger and I made it go away. There's some links on this page so you can take a tour if you want to, like have it show you around. There's absolutely ways that you can do that here. There's also a link that's going to be in the Word doc that Karen's going to send out to you later that you can watch. It's going to help you figure some things out. But just generically to talk about what's here is these are my different accounts up at the top. If you ever change your username and password, there's a little pencil here you can edit. You can edit your sign-in information, or you can change the account. So let's say we want to make this a MasterCard 7653 or 7631. Look at that. All of those things. If you ever need to disconnect one, you would click on the little pencil and your disconnect button is down here. Okay, so if you close an account, for example, you would check this box and then save and close. So you can update your account information that way. You can do it with any of them. And then what this is telling you is that there's a checking account that has, so our checking account sadly is overdrawn today at the bank. The bank is showing that our balance is negative $3,621.93. But in QuickBooks, it's showing that we have $4,932.12. So the reason that these two numbers are different, and we're going to talk about this, but let's pretend that it is the 28th of February and you're a client of mine and I happen to do my billing early that month. and I say, hey, you owe me $500 for your accounting for last month, and you write me a check on February 28th for $500. That check, I'm not gonna, like if it's 4:30 in the afternoon and we're meeting for happy hour, I'm not gonna take it to the bank that day. And even if I do take it to the bank that day, it's probably not gonna post before the bank closes at 5, right? So in your QuickBooks, for example, if you're diligent about your accounting, you would go home that night and you would go to the plus new button and you would add a check for what you paid me for the $500. And that would create a difference between what QuickBooks is showing you have for a balance and what the bank is showing. Because if that was the only transaction that was different, then our QuickBooks balance would be $500 less than what our bank balance is. The reason that these two, so they're actually off about $8,000, right? Because we're showing $5,000 to the good in QuickBooks and the bank is showing $3,600 to the bad. So they're actually off that whole span of dollars on a number scale, right? So from the $4,900 positive all the way down to the negative $3,600. So, but we'll see why later. And as we start to add transactions to QuickBooks, then this QuickBooks balance is going to go down, okay? Our savings account is a little bit easier. I don't know why there would be a $600 difference, but only a $200 thing here. So we'll talk about that, but it's going to tell you what your bank balance is that day versus what's in QuickBooks, okay? Okay, so someone asked, do credit cards and bank accounts need to be from the same bank? They do not. So you could have a Bank of America checking account, you could have a Chase checking account, and you could have a Capital One credit card, for example, and you can link all three banks. You can link as many banks as you have. And then my banking link twice, so I have account 1 and account 2. Should I just delete the link for account 2? They're both associated with the same account. So yes, let's say that you accidentally linked your checking account twice and you have 2 tiles here that are exactly the same, you would just click this edit button, go to edit account info, and then you would check this box to disconnect on save. And then it's going to go away. Okay. All right. A word about credit cards with Chase and Bank of America and American Express. So when you have multiple card holders under the same parent umbrella corporate account, a lot of times you have to link each individual card holder to a sub account in QuickBooks, and then you link the main corporate account with the main card holder. So I'm going to show you that real quick. So in your chart of accounts, so we have this Visa card, right? And these little arrows mean that they're linked electronically. So you can see both of our checking and savings and our MasterCard are linked. So I'm going to add a new credit card. Maybe. And I'm going to make it a child to my Visa card. And so I'm going to say Tanya's 1, 2, 3, 4. Save. And then let's say that Karen also has a card under that parent account. Maybe if you guys don't watch the screen and that I'm telling you, I'm so bashful today. All right, so Karen has an account as well. So if you're finding, like if you link your credit card, for example, and I know it happens with American Express, Bank of America, and Chase. So if you have card holders under the same parent account, you're gonna want to do it this way. So Karen and you would link my card. Sorry, I clicked one too many times. You would create sub accounts for each card holder, and then you would nestle them under the parent account under the Visa parent account. And then when you go to set up the online banking connection, you would link Karen's account. You would link this account in QuickBooks to Karen's card in the bank. And then you would link mine to my card. And then you would link the corporate account to the main account. Okay. So just keep that in mind. If when you go to your banking, like let's say we go and we're looking at our MasterCard and we're like, wait a minute, why are these only, like these are only Tanya's charges, where are Karen's? Like if that's the problem you're having when you look at your bank transactions versus what's happening on your bank statements or your credit card statements, that's likely what it is that you need to create those sub accounts and then link them together. So, okay. Questions about setting bank accounts up? Awesome. Okay. Now we're gonna, so this is what QuickBooks was designed to do. QuickBooks was designed to look at all of your bank transactions and then kind of help you figure out where to code them to. So I want to show you a couple buttons here. We're going to work in our checking account. There's a for review. This means these are all the transactions that are newly entered or newly put into your bank feed. These transactions here, if you were to go to look for them on your financial statements or under the vendor books by Bessie or under a rental, you're not going to find anything because this is just a holding place in QuickBooks until you remove them from this list and add them to QuickBooks or match them to a transaction. They are not part of your QuickBooks, okay? There's a categorize tab here that'll tell you anything that you've categorized already. So as we work through this for reviewed list, they're going to move off the for reviewed list and they're going to end up on our categorized list, okay? The excluded list is, let's say, this happens a fair amount of time, but let's say that something goes kaflooey at the bank and they change something and then the links break. And so you don't get any new transactions importing into QuickBooks for a week. And then the bank fixes it on their end. And then all of a sudden, all of your transactions show up one day, but you have duplicate transactions. Okay. So it's very rare that it would happen, but it has happened to me before. You could just click on it and then tell it you want to exclude it. And if you do exclude it, it's just going to remove it from this list so you don't have to deal with it. Okay. If something is excluded and you're like, oh shoot, I shouldn't have done that, you can come to your excluded list and just undo it. And then it's going to move it back to your full review. See? So, okay. All right. So about this list, there's a date, a description, a payee. This payee information is coming from QuickBooks. This description comes from the bank. The category or match also is something that's coming from QuickBooks. It's going to show us what we spent or what we received, and if there's an attachment. There's a new thing for some banks now where it will show you a picture of the transaction. So you know how you can log into your bank, and if it says, check 475 cleared, you can click on the link and it'll show you a picture of the check. Now they're starting to add those pictures into QuickBooks, which is super helpful. Because a lot of times when you write a check, like on your bank statement, it just says the check number and the dollar amount, and you have no idea like who it was written to or why it was written, if there was a memo, any of that. So it's kind of nice that it's like that. Okay, so when you can click on any of these columns to resort things by date, by payee, by name, by the dollar amount. For example, if you're like, oh, let me see how much I spent, let me find that $2,000 transaction. You can do it this way. We're going to work in date order today. And I'm going to work newest to oldest. So a couple of things. When you see these green things, it means that there's a transaction that QuickBooks thinks matches this item. Okay, So our bank downloaded this on January 28th, a bank deposit for $868.15. And if I click on this line once, it's going to expand it out and it's going to tell me that this is my bank detail. There's no description available from Example Bank, but it's telling me that there was a bank deposit on January 28th for $868.15. Can you guys still hear me? Because my power like totally just flickered. Everything fine? Okay, thank you. All right, so here, what this green thing is trying to do is trying to tell us that, hey, your bank has a bank deposit for $868.15. And me being QuickBooks, I found one in your QuickBooks for that same dollar amount on January 28th. Is this thing the same as that thing? And if it is, then you say, yes, I'm going to match this. Okay. The thing you want to watch for is that if you have bank deposits for the exact same dollar amount that repeat, like I was telling you about my client, the HOA, if it's $187.50 16 times, you're going to have a really hard time figuring out which one it matches to. So just keep that in mind. All right. So we'll look at these other deposits. So there's a deposit here on January 27th for $408. That certainly looks like it's going to be exactly the same as well. So I'm just going to match that. If you're confident that they're all correct, for example, so there's a payment here and this bank deposit and this payment, this one, if you're confident they're all correct, you can check them here and hit accept. And then it's going to move them all. And do you remember when we started this, we had 25 transactions. Now we only have 19. All right. This one is different. Do you see how it says 2 matches found? So if I expand this line open, it's going to tell me it found 2 transactions and QuickBooks doesn't know which one's which, right? So this is a spent money. We spent $75. Our bank description tells us it's for Pam seats. And QuickBooks found 2 $75 transactions. It found one to Pam seats and it found one to Books by Bessie. So very clearly it's the first one. If QuickBooks matched it to the wrong one, you would just check this dot instead of this dot. Okay. And then now that we told QuickBooks, hey, it's this one, we're just going to hit match. If you don't enter transactions into QuickBooks using the things that we've learned till now, like if you don't enter your expenses and if you don't enter your sales receipts or your bank deposits like that, then none of these, you won't have any of these green things. Okay. You're just going to have blank lines like this, which is fine. It's totally fine. Let's look at this one that has 2 matches as well. So here on 1/26, the bank told us we've spent some money at Squeaky Clean Car, $19.99, and it's showing there's a check called debit on January 26th to Squeaky Clean and a cash expense on January 19th to Squeaky Clean. So the dates, they're the same vendor, they're the same dollar amount, but the dates tell me that it's the top one and not the bottom one. Okay, so I'm going to match that one. Is that clear on when there's multiple matches? Does that make sense? Okay. All right. The other thing that you can do. So for example, if you buy something from somewhere and every time you go there, it's the exact same thing. So for example, like your internet provider. So let's say you use CenturyLink as your internet provider. You can tell QuickBooks every time it sees CenturyLink to record that expense to telephone and internet, or every time it sees Hartford Insurance to record it to insurance expense, or every time it sees Tanya Lucan CPA PC, put it to accounting expense, things like that. So once you record those transactions, you can create these rules to make sure that the information to make sure that every time you buy something, it's going to the exact same place. Okay. These rules don't work a lot of times for things like Amazon or Costco or Sam's Club. Because if you think about what you can buy at those places, like you could buy tires, which would be automotive expense. You could buy computers, which would be office supplies. You could buy food, for example, which could be meals and entertainment, or food costs if you were a restaurant or a food purveyor of some kind. So there's a million things to be careful, but if it's always the same thing, then you can set this up. The other thing you can do with it, like I have a client that has an HVAC company, and they have a fleet of vehicles, and there's loans on the vehicles. So you can create rules that say, when you see US Bank financing, for a truck, and it's this dollar amount, record it to this loan account. When it's a different dollar amount, put it in this different account. So you can create rules with dollar amounts as well. Like think about Google, all the things you could buy from Google. You can buy Gmail from Google, you can buy cloud storage from Google, you can buy apps from Google. So you can set rules that say, if it's for G Suite and it says suite in there, then you would want to go in and say like, okay, that's dues and subscriptions. But if it says that it's for, Google storage, then it goes to my, computer and internet expense, for example. Okay. Musana asked, how can I demo how to create a rule? Absolutely. I love that segue. All right. So we're going to use these A rentals. So I'm going to click on the oldest one. And if you don't have a match, this is what happens. So it's going to ask you who your vendor or customer was, what category it was, if you're going to bill it back to a customer of yours, if it's billable, what the location is, if there's a class, if there's a tag, if you want to add a memo, all of those kind of things. So you can record your transactions this way without doing any of the things that we've learned to this point. You cannot create two-way items from the bank window. Okay, so remember we talked about Cassie having to buy 3 pallets of bricks yesterday. If she needs to record that she bought 3 pallets of bricks, she can't do it from here. She has to go add it as an expense. Okay, so I'm going to put in, it's actually down here, it's A1 rental. So I'm going to put in A1 rental. I'm going to add them as a vendor. We did this yesterday too. Remember the slider is going to pop out to the side. Maybe not. Okay, perfect. And then it's equipment rental is what I have. We're going to call it job expenses for equipment rental. If I wanted to make this expense for a certain customer, so let's say we rented this for Amy's Bird Sanctuary's job, we could pick her name. If we want to bill her for it later, we could check this box. If we needed to add a location, we could pick it here. And if we wanted to add a class, we could pick it here also. You could add a tag if you needed to, and you could say here that it was for a backhoe. All right. That makes sense. You can always do this part. Okay. You can do it over and over and over again. And if you continue to do it over and over again, and you always tell it that a rental is equipment rental, QuickBooks will promptly ask you, let's add this one and see if it asks me. So now, do you see how these ones turn green? QuickBooks thinks that a rental then is always going to be job expenses for those things. And if I add it here, it should pop up. It's going to make a liar out of me, watch. Perfect. So it pops up a thing. So QuickBooks will do this to you if you record transactions multiple times that look the same to QuickBooks. So because I already saw a rental and did one of them, QuickBooks will say, hey, is a rental always equipment rental? And it's this always that is super important, because if it's not always, then you can't make a bank rule. Or you can make a bank rule, but you have to limit it. You have to put in some parameters. So what happens is QuickBooks will suggest this to you. And if you like this, you can say, yes, create this rule. And then every time it sees a rental, it's going to put it to job expenses or equipment rental. But look at this one. Here's an A rental here, and it didn't do anything with it. But the reason it didn't is because it's a receive money. So let me show you the rule. So the rule we just created is up here now. Do you see where it says rules? If I go to rules, we're going to see the A1 right here. And it's going to tell me that it was a suggested rule. So I'm going to edit this. This little slider, you can get to this slider in multiple ways. So when it popped up that little window, there was a link at the bottom or a button at the bottom that said edit. I could have clicked on that and it would have brought me here. But let's talk about what's here. So it's telling me this is a suggested rule for a rental is job equipment expense. This to me is ridiculously wrong, like long, not wrong, just long. So I'm going to do A1 rental as my rule name. Okay. And it says apply this transaction that are money out or money in. So you can have, do you usually spend money with this company, or do you usually get money from this company? So you can create rules for money coming into your accounts and money going out of your accounts. And again, the money coming in and the money going out applies to credit cards and like any kind of account that you can, like credit cards, savings accounts, checking accounts. So this was a money out rule because we were spending money with A1. And then it's going to ask me to apply this rule in what accounts. So I can check this box and say in all accounts, because if we're always, every time we go to A1 rental, we're always renting equipment, then it's always going to be equipment rental. And it doesn't matter if we wrote them a check or paid them with our debit card or paid them with our MasterCard. So if that rule applies, regardless of how you pay them, then you're going to want to check this box. Let's say that you have your G Suite, your Google G Suite email set up to come out of your checking account and to charge us to your debit card, and you use your Google storage and you pay it with your credit card, then you would pick your rule to apply only to your checking account or only to your MasterCard. Okay, make sense? All right, then this is the meat of the rule. It says include all of the following. So you can say any of the following or all of the following, and it'll make more sense in a minute. So the description contains a rental, right? This description you can, if it's not, sometimes there'll be a whole string of junk that shows up in our bank account about what it is that we bought. And when that whole string of junk shows up, you can say bank text and have it contain a rental. You can say it doesn't contain suite, for example, and then it's going to cut out all your G Suite things. You can say the dollar amount is equal or not equal or greater than or less than, whatever makes sense. So when I do those bank rules for my client that have multiple vehicles financed with US Bank, I do the dollar amount, I do the description contains US Bank, and then I add a condition that the amount is equal to whatever their payment is. Right? With me? Clear as mud? Okay. The other thing, you can test your rule, and it's telling me this isn't going to apply to any transactions because we already recorded them. But we'll do another one when we get back to the other screen, and then we'll test the rule and you'll see it work there. And then once QuickBooks finds all these things, so it's found money out to a rental, then we have to tell it what to do with it. So what kind of transaction is it? Is it an expense, a check, a transfer, or a credit card payment? And we're going to say it's an expense. Remember, because we can always use expense. Checks are only for our bank accounts. Then we have to pick a category. So this category is from our chart of accounts. And so we're going to pick its equipment rental. Then your payee, who is it? Who are we buying something from? And we're buying it from A1 Rental. We can also tell it to pick a customer over and over again. But again, if you set up this rule today, is it still going to be for that customer 3 years from now? Probably not. So be careful there. You can add a tag, but again, watch the longevity of your rule, and you can add classes if you want. And then you can replace the bank memo with something else. So you can have it come up with something custom here. Then you can also have it add text and keep whatever showed up in the bank account. then you can, this little slider at the bottom, it says when it meets all these criteria, what do you want QuickBooks to do to it? And if you have it turned on in green here, QuickBooks is going to see it land in the bank account, and then it's automatically going to record the transaction, and you're never going to see it on that list. Okay, it will never show on our bank list. But if you turn it off, it's going to show that there's a rule that applies to this transaction. And then you can review it before you approve it and put it into QuickBooks. So I'm going to turn this one on to auto add. And then I'm going to answer a couple questions. So, okay, so someone asked, after you accept the ones reviewed, do they go into the bank account directly? Yes. So when you're on the screen with the bank feeds, what happens is those are not in QuickBooks yet. But when you do accept them or add them to QuickBooks, they go into your bank account as a spend money or into your bank account as a receive money, depending on whether it's a deposit or withdrawal. And then the other half of the transaction is an expense account, a loan payment, revenue, something like that. So, so yes, until you accept it, they're just kind of sitting there, not doing anything. Okay, Nancy asked, why did we apply it to all bank accounts? Nancy, I applied this particular one because every time we go to A1 rental, we're renting equipment. So and it doesn't matter to me how I paid them. It just matters if, sorry, Barbara Gordon has the hiccups. It just matters. It doesn't matter how I paid them. It only matters that every time I pay them, it's for equipment rental. So it's just a way to tell it so you wouldn't have to make A1 rental rules for every single type of bank account or credit card account that you have. Okay, so Sarah asked, I didn't see the bottom of your screen. Oh, got it. Okay, so at the bottom here, this is the automatically add. And if it's green, then that means that it's automatically going to record that transaction every time it sees it. So, all right, let's do some more because this makes more sense the more time you do it. Okay, I'm going to go back to my banking tab. And then there's a Books by Bessie. That's a terrible example. All right, Hicks Hardware. Okay, so we spent $24.38 at Hicks Hardware, okay? So there's a create rule button down here at the bottom. The nice thing too is there's a categorization history. This is being rolled out and it's in some of my clients' QuickBooks, but not all of them. So if yours doesn't have it, it might be because it's on older servers. It might be because the feature is in a different version of QuickBooks. I haven't figured out if it applies to different versions. It's just super handy when it's there. So if you click on this categorization history, it'll tell you in the last 12 months, this is how you recorded this transaction. It's telling us that we have never recorded this transaction. So let me see if I can find. So this is a Books by Bessie, and it's telling us that we've had one transaction in the last 12 months, and it went to legal and professional fees. Okay, accounting, went to accounting fees. Okay, so back to my Hicks Hardware. So with Hicks Hardware, let's say that I'm going to create this as a rule. So I'm like, because every time we go there, we're buying job materials. So I'm going to name my rule, whatever you want to call it, Hicks Hardware. So I like to leave spaces out, but that's just me. You can do it however you want. And then we have to decide what this applies to. So does it apply to money out or money in? And usually we spend money at Hicks, so I'm going to pick money out. And then to go back to Nancy's question earlier, does it matter if I paid them with my debit card or with my MasterCard? It doesn't. So I'm going to pick all bank accounts because every time we go to Hicks, it's going to be for job materials. And then it has to include all of the following. So the description has to contain Hicks Hardware. And now I can test my rule and it's going to tell me it's going to apply to 2 transactions, which here's the other one. Okay, so back to my rule. I didn't realize there was two. I wanted to check it. Okay, so it's going to apply to 2 transactions. Then it's going to ask me what do I want to do with it? So I'm going to make it an expense. It's not going to be uncategorized expense because that's terrible. So we're going to pick job materials. And then my payee name will be Hicks Hardware. I don't necessarily want to add a customer to it because it could be for anything. I'm not going to add a tag. You can add a class or a location, and I can add some text if I wanted to. Here, I'm going to tell it to auto add this rule, or I can turn it off if I want it to just see. I'm going to turn it off for a minute so you can see what happens when you create a rule but have it not auto add. So I'm going to turn it off and save it, and it saved my rule. So now do you see here, it says there's a rule that it wants to apply. And the rule applied here. So I can click on it's kind of tiny there, but I can click on it and it pops up the list of things again. So in theory, I could go to auto add and hit save, and this Hicks Hardware on January 10th just went away. It's no longer there. Okay. So that's how you make your bank rules. A couple of things about troubleshooting them. When you're making your bank rules, if you're finding that things look weird later and you're like, why is this doing this to me? Go up to your rules and there's a search box here. So you can type in Hicks, for example, in your search box, and it's going to come up with the rule. So if you have a rule set for APS or SRP or something like that, you can search for it up here. One of my friends recently was struggling with her QuickBooks, and she had gone in and she had a recurring transaction, which is different from a rule. So a recurring transaction to her, she said, hey, QuickBooks, on the 5th of every month, enter my internet bill to CenturyLink for $59.99 or whatever. But what happened is her recurring transaction was entering it for $59.99, but she also had a bank rule. So what QuickBooks was doing is it ended up, her rate changed and it went to like $63. So the rule was still applying. So she would get her $63 entered from the bank rule, but she had a recurring transaction for $59.99. So it kept adding the $59.99 as well. So she had 2 transactions for every month and she couldn't figure out what she was doing. So your rules are here under the banking and then rules, or rules at the top. Your recurring transactions are under the gear. Okay, there's no recurring transactions, I don't think, in this QuickBooks demo. Oh, I guess there is a telephone bill. So this telephone bill, this is what was happening to her, is that it had a recurring transaction and it had a bank rule. So just keep that in mind. If you're like, why are there 2 things every month? Look in your recurring transactions, look in your bank rules to make sure that there's not something that's being duplicated. Okay. All right. I think more questions about the rules. Okay. You can create rules for revenue as well, for any bank deposits that are coming in. This A1 rental here, it's a backhoe deposit refund. Do you see? That's what the bank transaction says. So when you return something, it goes back to the same expense account that it was. So it's a negative expense and not revenue, if that makes sense. So I'm just going to record this to A1 rental as equipment rental expense, even though it's a deposited money coming into us. All right. More questions about bank rules? Okay. The other thing I want to talk about is when I was warning you about PayPal. So if I go to my savings account, it's telling me that it found a match for this one. I'm going to. Okay. So this match that it found was actually a bank deposit. What happens a lot of times when you make payments against your credit cards or transfer money into your savings account, you're moving money from this tile to this tile. And QuickBooks, it looks at these bank feeds in a silo. So it looks at your checking account all by itself and your savings account all by itself and your MasterCard all by itself. So it doesn't necessarily see that the payment that you made from your checking account to your credit card account are the same transaction. It's two halves of the same transaction. So there's half of it in your checking account and half of it in your MasterCard, right? It doesn't see that those two things go together. A lot of times it's gotten better with it, but remember that when you're making payments or transferring money, you're going to have it come out of your checking account. And then when you get to your savings account or your credit card account, you need to match a transaction. You always want to find the match. You never want to add it from your checking account. I'm sorry. You never want to add it from your credit card or your savings account. You want to find the match that came out of your checking account. Okay. So I'll say that one more time. So when you transfer money to your savings account or you pay your credit card, that is going to be a spend money in your checking account. So when you record it here, you would record it as, hey, I paid my credit card account. So let me find, we're just going to pick this thing. That's a bad example. We're going to pick this thing and we're going to say that this was a payment against our MasterCard account. So you would pick that we're paying $2,000 to your MasterCard and you would add it that way. So I'm adding it in my checking account. And then when I go to my MasterCard account, I would see a received money for $2,000 and I should see this green match was found. Okay. So you always want to make sure that your payments to your credit cards and your transfers into your savings account or out of your savings account are matched to transactions and paired together with the one from your checking account. Because QuickBooks doesn't see that they're the same thing because it looks only at these tiles individually. And so it looks at these transactions and it looks at these transactions, but it doesn't necessarily know that two of them go together. Okay. So keep an eye on that. All right. More questions about the bank feeds. If you can clean out your bank feeds, then your books are probably pretty good. So most of these that are in here are finding matches, but you can absolutely just categorize each one of them as like, this is PGE. If it found a match, you should match it if it matches. That sounded kind of confusing, but if it found things, then you would want to match them together if it's appropriate. But it's a rarity. It's a rarity that most people are entering all of their information. So in advance. So here's, you would pick gas and utilities. You could create a rule from this, all of those things. Okay. QuickBooks will not match transactions to things older than 6 months. So if you're behind on your accounting, for example, you're going to have to click this find match button. And then it's going to open a separate window. Maybe. Okay, it's going to make a liar out of me. It would open up, it would pop up a new window and then you would change the date range to be into the past. If it's in the bank feed and it's 6 months old, you can still record it as an expense from there. It's just if you already have some transactions in QuickBooks and you need it to find a match, it's not going to find something that's 6 months, that's more than 6 months old. The recurring transactions, Kusana asked, it's under the gear icon and then recurring transactions. Okay. All right, let me make sure I covered all the. All right. Okay. And we talked about rules. All right. Let's reconcile like some crazy people. Okay, a couple of things. When you get your bank statement or your credit card statement, it usually says, here's your beginning balance, here's your bank deposits, here's your withdrawals, here's your ending deposit or ending balance. Or your credit card will say, here's your beginning balance, here's your new charges, here's your payments, here's an interest charge if there is one, and here's your new ending balance. The reason that there's a tool built into QuickBooks called a reconciliation tool. And there's a reason that you would record there's a reason that you would use this tool to make sure that everything that you thought you put into QuickBooks, you put in correctly. So remember I was telling you my friend had the bank rule and the recurring transaction. So she had like, and not a lot, but there was $600 worth of telephone expense that was sitting in her QuickBooks and showing as an expense because it added the bank transaction and it added the recurring transaction. So she overstated how much her expenses were for that. So the reason that you reconcile your accounts is to make sure that what you put into QuickBooks matches what the bank has. Okay. And then that's how you want to figure out what, like, that's why you want to use the reconciliation window. Amanda asked if you're doing a recurring transaction for a loan on a vehicle, once the vehicle is paid off, does the recurring transaction stop automatically or do you need to stop it? With the recurring transactions, you can tell it to stop after so often. So you can enter a start date and you can enter an end date. So you can set it this way, but it is also a good idea when you're done with it to stop it. So here you would just delete it when you're done. Okay, so reconciliation. Reconciling your QuickBooks, your bank accounts, is something that I feel like all of you should be able to do. Don't do it when you're frustrated, maybe do it with an adult beverage, but you have to use your brain a little bit more. You're not just adding something new to QuickBooks. So you go into the gear icon and then reconcile is here under tools. Okay. You can also get to it from this accounting tab because when you go to reconcile your accounts, you're going to reconcile like the little accountants that you are, right? So you can go to accounting and then reconcile as well. There's a video here that you can watch for 2 minutes about how to do it. So you are more than welcome to watch it. But we're going to click get started. That little box pops up all the time. And then you're going to get this box that pops up. And then you just close it or do whatever. There's a video here and there's a little fellow named Stuart that'll walk you through how you do the reconciliations if you want. So feel free to watch the video. This pops up most of the time as well. And then it asks what account we want to reconcile, our checking account, our savings account. So you should reconcile all of your bank accounts and all of your credit card accounts every single month. Okay. So if you do your bank feeds, if you record your transactions through your bank feeds, QuickBooks is going to do a lot of the reconciliation work for you. You just have to figure out, is that really what I think it is? Okay, so on your bank statements, we're going to reconcile our checking account. So you would pick whatever account you're doing, your savings account, MasterCard, Visa. We're going to pick our checking account. And then it has a beginning balance here. Do you see where it says this already? $5,000. If this beginning balance right here that's hard coded into the screen doesn't match the beginning balance on your bank statement, there should be a little warning box up here that says, hey, your bank statement's off this much. We can help you fix it. At that point, if it's, go ahead and try to fix it that way. It means that you changed something after you reconciled. So it's trying to tell you to figure that out. If you get stuck, let me know. Like usually it would take about 10 minutes and we can figure it out. So, and I don't mind. So you would enter then your ending balance from your bank statement. So we're just going to pretend that our ending balance was $3,800 and then ask you for the statement ending date. And we're going to say that our bank sent us the statement on the 15th of February. Okay. Most banks send them on the end of the month, but however it does. And then we're going to start reconciling. I don't think I don't have a bank statement, but if you can imagine in your mind what your bank statements look like, there's a section that shows all your withdrawals. There's a section that shows all of your deposits, or your credit card statement just usually shows a giant list of transactions. So however you want to do it, like, you should methodically go through your checking account or your credit card statement in an order that makes sense to you. So once you get to this screen, essentially all you're going to do is you're going to match your transactions in QuickBooks with whatever's on your statement. You can print out a copy and put little check marks like the accountants that you are, or you can just have it on a separate screen, or you could squish them up side by side or have one on your phone. You'd have to have your bank statement on your phone because you can't get to this from your phone. But and then it pops up some little tips that are here. So here you can change the format of the layout. You can make it ultra compact, things like that. So what you do is you compare what's on your bank statement with what's in QuickBooks. And if you see it, then you just check these boxes. You check these little dots, okay, for everything that you see on your statement. Do you see how this one is green and has this little plus button here? This is the Hicks hardware. So this Hicks hardware was automatically added with a bank rule because that's what this little plus button means. This one down here means it was added, it was matched from the bank feed. So the reason that they're already gray is because QuickBooks already knows that those transactions are in our bank account because we matched them from the bank feed. So if you're using the bank feeds, and by bank feeds, I mean this window here. The bashful interneting in here. Any minute now. Okay, so if it's the end of the month and you've cleared out all of these things and they're all gone, when you come into your reconciliation screen, a whole bunch of stuff is going to be gray, right? So once it's all in here and it's all gray, it's also going to have these dates. Do you see where it says cleared date? So that means that this expense came through our bank account on the 25th, this one on the 26th, this one on the 27th, kind of thing. So you just kind of keep marking off things that match. And then eventually this difference will get to 0. It's hard for me to show you because I should really do the math on it, but it's hard for me to show you because I just made up the $3,800 ending balance. But a lot of times what'll happen is you'll put in $3,800 for your ending balance and you'll be off $9, for example. And I just wanted to tell you this trick. So if you're off by a multiple of 9, meaning you're off $9, $90, $900, 9 cents, 45 cents, $450, 36 cents, $36. If you're at any of those, so 9, 18, 27, 36, 45, 54, 63, 81, 72. I did those two backwards. But if you're off any multiple of 9, it means it's a transposition error. So it means instead of typing 3,800, you should have typed 8,300. Okay, that's the transposition. You took 2 digits and you flipped them around from what they should be. So that's kind of an easy trick. So if you're off $450, look for a transposition error first. Okay, so make sure that your statement, and let's say that this should be $8,300 instead of $3,800. You click this edit info button and you can change it here to make it the correct dollar amount. So a lot of times, like if I'm off $9, it's so frustrating when it's like 20 cents because you're like, man, I don't want to look for 20 cents, but I'll look for like 2 seconds. But once you pick off all of the transactions that are in there, you're going to see you'll see, like you're just going to match individually these things on your statement to these things in QuickBooks. Okay. If you're doing your bank feeds correctly, when you come in here, it'll already be 0. So, which is super awesome as well. The other thing you have to watch out for is things that are on your statement that are in a future month in QuickBooks. So if you have a transaction in QuickBooks that's dated February 28th, I'm sorry, if you have a transaction on your bank statement that's dated February 28th, but it's dated March 1st in QuickBooks, it's not going to show up on the screen and you're going to be off by that dollar amount. So what you would do is right here, there's a filter. And it's filtered for the statement ending date. So I'm going to show you at the bottom here, the last one says 2/1/2/11, the last date. If I clear this statement ending date and I go down to the bottom, now I have these transactions on the 23rd. Okay. You with me? So you can reset your statement ending date. A couple other things, you can also click on these column headers to resort things. So let's say you're off $4, you can resort this list and be like, oh, here's a $4 transaction. You can resort by deposit, you can sort by payee, you can sort by check number if you have check numbers in QuickBooks. The other thing is you can also change what your view. So at the moment, it was sorted by date, and I have payments and deposits kind of mixed together. I can check this box and it'll show me only my deposits, which is really helpful if you get to the end of your statement and you're still off, $4,000 or something. You can be like, all right, let me look at my deposits, because if you look at your deposits, you're like, oh, wait, here they are. It also adds them up for you up here. And a lot of times your bank statements will also say you had 16 transactions for $4,287. So you can say here, oh, I only have 9 things checked, where my bank thinks I have 16 things. So I better go find, 7 more. So it'll show you the number of payments that came out and the dollar amount, your beginning balance, the ending statement balance that you put in, and then this one is just a math. So, but your payments are here, your deposits are here, and it would work the same in your credit card accounts about having an expense, your charges versus your payments. Okay. The last thing that you can filter for payments also. And then the last thing, so let's say that you get done and it's $0. The thing you want to look for, and this is where my friend got hung up with the multiple telephone expense, is because she had all these things that were super old that were never checked off. So if you find that there's something here that's never checked off, you need to ask yourself, why is this thing still showing here? So, and does it make sense? Because if it is, if it's February 28th and you wrote me a check and handed it to me when we met for happy hour, like that's going to show on your February bank statement window as something that didn't clear in February because you just gave it to me that day. But if it's something from like November, you probably want to look at it and be like, does this make sense? Why is that thing still there? And then that's where you want to do some research. So you shouldn't have a ton of old transactions when you're done reconciling. Okay. Most of the time, consider avoiding them. These ones that are here, this is showing that we paid someone $300 and they never cashed a check. So maybe we call them and be like, did you get that check? And then this one's showing that Bill's Windsurf Shop paid us $175. And like, what did we do with the money? Is it still sitting in our glove box in our truck and we need to go deposit it? Maybe. So, all right. And then when you're done, when you're done, this box up here, it would say like reconcile now. It would turn all green and it'd be really cool. And then you click reconcile now, and then it says congratulations and things like that. So it's kind of fun. Not gonna lie, I enjoy that part when it reconciles on the first try. If you need to save it, come back for later, you can just do save for later. If you totally messed it up, there's an option that says close without saving, and then you can just start over again. So, all right. So we talked about reconciling. Reporting, I just want to show you a little bit about reporting. So under your reports window, there's all kinds of reports. I just want to show you a couple. There's a few that are always marked as favorites, which is your profit and loss and your balance sheet. We were kind of looking at those yesterday. So if you were to run your profit and loss, for example, someone was asking about discounts. Your discounts would show here. Your revenue accounts would show here. You can click on any of these things to see the detail that's within those accounts. And then there's always a link at the top to go back to where you were. There's some boxes up here, so you can change it from this year to date to this month, for example, or you could do last month. Or you could type in a date range, like if you wanted to see only the 10 days in January, you could do that. Your display columns here, sorry, I'm going to make it this month so it shows some of our transactions that we're doing. You could pick, show it to me in weeks. And then it's going to divide it into weeks. You could say, show it to me by customer. And you can run profit and loss reports by customer. So here's all of our Barbara Gordon transactions. You can say, show it to me by location. And you could see it that way. You could also have it show it to you by classes, and it'll show you by classes. So there's a multiple things that you could do here. You could have it show all accounts and not just the non-zero accounts. The other thing you can do is you can compare a previous period. This comparison isn't in all versions of QuickBooks, though. I'm just going to warn you. So you could say, show me this, show me my previous period with the dollar and percent change, for example. And then what it's going to do, sorry, I made this really ugly. I'm going to change this back to total only instead of by class. And then it's going to show me February of 2023 compared to January of 2023. And so in February, we've done, in February, we did $9,200 worth of income. In January, we did $8,300, which is a difference of $853 or 10% more, because that 10% is positive. So that's a couple of things you could do. If you want, like, let's say we wanted to do this, but we only wanted to see one location, we could click on this customize button, and these boxes kind of up here are the same as these that were on the screen that are now grayed out behind, but there's a filter here. So if you click filter, you can say, show me the same report, but only for location 1. And then when I run this report, it only shows me location. So there's some really neat tools that you can build in here. Sarah said she'd like to create a report on the summary of this year's billing and breakdown by client, basically to see who's your top biller. There's a better way to do that than looking at your profit and loss reports. So if you come in here, it has a custom report section that's always there. These favorites are here. If you like some of these, you just put a star by them and then they will show up in your favorites. If you don't like those reports, you just unstar them and then they go out away from your favorite reports. But Sarah, if you go down to your sales and customer section, there's a whole bunch of sales reports that are available to you. So you can do a sales by customer summary, for example, and it's going to tell you like who your biggest customer is. So you can also do, and this would be the reason if you're just recording your bank deposits as sales, there's going to be nothing on this report, okay? Because it's not going to come through that way. There's also sales by item. Your product and service summary, sales by product and service summary is going to tell you that like what we invoiced everyone for. So for example, here's the $8,400 installation job that we created for Amy's Bird Sanctuary earlier. All right. So this is why you would enter all of those transaction details so that you can run these reports later. But there's about 1.5 million reports that you can run. In some versions of QuickBooks, remember we talked yesterday that Simple Start only had 20 reports and Essentials has like 45 reports and Plus has like 60 reports. There's just a ton of them in here for you to see. And then if you're like, you know what, I don't know what it is, but like I need to find some report of bills. So here's your bill payment list, or here's your unpaid bill list, or here's your bills and applied payments or unbilled time. And let's say you're like, wait, I did those delayed charges. Oh, this is not going to do it. It's not turning on. Let's say you want to see your sales by customer. So you can run all these kind of reports here. And if you don't know what you're looking for, you can just start typing and see what comes up. The other thing is their 1099 reports are here for when it's time to generate 1099. Your sales tax liability reports are here as well, and then your employee information, if you had employees. These accountant reports are ones that we love, but most people probably don't use those. So there's a million of them here. You can customize reports. So if you do, let's say you do create a report that you like and you want to run it over and over again, you can save it. So you could customize it, and then you could save your customization. And if you save it, then it's going to save in this custom reports tab. There's management reports. So if you save a custom report, then you can have it automatically emailed to you if you'd like. There's management reports where you can create like little, with cover pages, table of contents and things like that. So you can get really fancy there. And then if you have multiple companies, you can take data from across multiple QuickBooks files and combine them into one report. Okay, so Nancy asked if there's some data and analytics. So there is the kind of like you can go to this performance center and kind of like mess around in here and build your own charts and things like that. So you can do some of these things in here. Absolutely. You can set up industry comparisons too. So that North American industry classification code or standards code that we all use, the NAICS code, you can create that. You can link it here, and then it will tell you like based on other people in your industry, this is where you're trending. So I haven't used this part yet, but there are some things in here that I think would be helpful, especially if your brain works visually like this. Mine tends to be more analytical, and it's like seeing accounts receivable as $12,000 doesn't help me. Like I want to know like who owes me that 12 grand. So, but that's just me. So if you like it, by all means, whatever works for you. So, okay. So that was, we talked about some of these. These are the differences in the reporting. So Simple Start has 20, Essential 40, 65, and then over 80. And then there's list reports, which give you a list of data. So like your chart of accounts is a list report. Summary reports is that one that we looked at for Sarah, which showed the revenue by customer. Detail reports would be more like the product or service report that we ran, and then you can run all kinds of specialized reports. All right, let's talk about sales tax for a minute. So I'm going to play this little video, and then there's some sound with it. The guy's going to talk. So maybe.
Hi, this is Jason from the QuickBooks team. If you sell taxable products or services, QuickBooks helps you track how much sales tax to charge. If you use this feature, you should know how much you need to pay when you file your state and local sales tax. Let's go over how to set up sales tax. Select Taxes. Note that your navigation may look like this. Enter your business's address. This address sets up your sales tax rates. If this is already in your company settings, just confirm that it's correct and select Next. Most businesses only collect sales tax on sales that happen in their state, county, or city. If that's the case, select No. But if you're required to collect sales tax in other areas, such as different cities or states, choose Yes here, and then select all of the agencies that you collect sales tax for. And select Next. You can start invoicing customers at any time, but let's set up the sales tax payment schedule first. Every state has different requirements for how often you need to make sales tax payments. In this example, the frequency for filing taxes depends on the average amount of sales tax you collect on a yearly or monthly basis. Remember, your state or local laws might be different from each other, so be sure to check with your accountant. Now, select the Filing Frequency drop-down menu and choose how often you file sales tax. If the filing frequency is different for other rates and agencies, don't worry, you can assign separate filing frequencies to each of them. Select Save. This is where QuickBooks keeps track of the money you've collected from customers on sales where you charged sales tax. The top section always shows how much you owe in the current filing period and how much has been collected so far for the next upcoming filing period. If you forgot to add an agency you collect sales tax for, or if you just need to change something, select Sales Tax Settings. From this screen, you can add tax agencies or edit the tax agency's QuickBooks set up for you earlier. Use this window to update your filing frequency or choose a different start date. The start date is the date you want QuickBooks to start tracking your sales tax for you. If you've made any changes, select Save. You can also add a custom sales tax rate if something you collect wasn't automatically set up. Just choose whether it's a single or combined rate, the name of the sales tax, and what agency you collect it for. Now you're ready to set up sales tax for your company.
Okay, so QuickBooks makes it seem like super easy to do things by that, but just remember that the people that are setting up sales tax, they're not accountants. They're and they're programmers that work for Intuit. So sometimes what they interpret the sales tax rules to be are not actually what the sales tax rules are. So just be careful if you do turn on the sales tax features within QuickBooks and you're letting it automatically calculate the tax for you, that you understand what it's trying to tax and why it's trying to tax those things. So because there are a lot of pitfalls and it can create a mess. The other thing is you have to specifically tell it that you're making sales tax payments. So when you're in your sales tax center, for example, if you're paying your sales tax, you just can't go to write a check. So let's see if it. So you would record tax payments. For example, you have to do it this way, that I'm paying $404 worth of sales tax out of my checking account today. You have to record them in the sales tax center as sales tax payments. Okay, you can't just write a check for them, or you can't just enter them from the bank fee if you're using QuickBooks to calculate your sales tax for you. Okay, the other thing you can do is you saw him add that manual rate at the end of that video. You can absolutely just add the manual rate and then do it yourself. So however it works for you, just make sure that you understand what sales tax is doing, what you're supposed to do about it, how you're supposed to collect it, and what you're supposed to collect it on. And most departments of revenue will have classes that you can go to understand what your requirements are. Okay, so QuickBooks also does payroll. I did that. So, okay, so within QuickBooks, they do payroll. There's a simple start version of payroll. There's one that goes with Essentials and the one that goes with Plus. And there's different features about like how, you know, like if they handle garnishments for you, or if they're going to automatically file and pay your payroll taxes, or if you have to go through and check some boxes and have it do it for them. There's all kinds of things like that. If you want to sign up for payroll, you just go into workers or payroll and then you click get started. If you do get started, it's going to ask you some things about, do you want to track your employees' hours? Do you want help setting up your payroll? Do you want to have someone assist you if you receive a notice from some regulatory agency? And do you need HR support? So a quick word about those things is most of the time when you hire like the ADPs and the Paychecks of the world that process payroll for small businesses, or a lot of those small business payroll companies, when you sign up with them, their job is to lure you in the door with payroll, and then they sell you all these extra things. So just be aware that sometimes those extra things are more expensive because you're buying them from a payroll company instead of buying them directly from whoever the provider would be, like workers' comp, for example. Nancy, I think all payroll companies do. So it just kind of depends. So Paychecks, for example, I like Paychecks because they have a dedicated phone number. Usually there's one person that processes your payroll and you talk to that person over and over and over again. ADP, I feel like has a little bit more of a robust system that can handle a little more things. But you get an 800 number for a team and not necessarily the same person over and over again. I think with QuickBooks, if you know what you're doing, it's great. And I think that, you know, QuickBooks is, they kind of price it affordably to get people in the door. You know, like, I mean, they all kind of have their pitfalls and they're, you know, I mean, I think you just go with what works best for how you want to report the payroll and how you want to communicate with someone. So Delphina asked, if you have less than 5 employees, do you suggest a payroll service or just do it yourself? So I would say, like, you're going to have some kind of payroll service. So like with QuickBooks, for example, like you could get their lowest service and then you're filing the reports and submitting them and making the tax payments. So like I do that for my staff. Like I enter the payroll hours and then I, you know, send off their paychecks, and like I just have kind of a QuickBooks assisted payroll, I think it is. But I'm not going to lie, like this year I went to file my W-2 and my own W-2 from my own company was wrong because QuickBooks hosed something up along the way. So then I had to go get them to fix it. And then there was a bit of a nightmare on hold with them. And then I got someone who didn't know payroll. And then I was just like, forget it, I'll fix it myself because I'm a CPA and I know how to fix it. But so again, like, it's just whoever you feel like you could communicate best with, because payroll is complicated and the frustration isn't going to be when it works. The frustration is going to happen when it breaks. And how are you going to get it fixed? So if you want to set up with QuickBooks, you're going to need some information. So you have 3 options. You can work with Intuit to set it up. You can file this form, or you can convert from a third-party payer. So if you're using a different payroll company now, QuickBooks will help you convert from them. And then they need this list of information. So your legal name and address, what kind of benefits and pay options you have, your W-2 information or W-4 information from your employees, their direct deposit, and then all of the tax or regulatory agency information that you have as an employer. Then there's a whole slew of reports that you can run for QuickBooks once you turn on payroll. And then I wanted to show you this video about time tracking in QuickBooks. Maybe. You guys, I'm telling you, this is crazy. Gonna be the best video ever when it finally loads.
This is Annie from the QuickBooks team. Both QuickBooks Online Payroll Premium and Elite come with QuickBooks Time to track employee hours. Let's go over how to add employees to QuickBooks Time so you can track their time, see who's working, and then approve timesheets when it's time to run payroll. To start, select Payroll, then Employees. Find the employee you want to track. If you haven't added them yet, you can add them now. When you're ready, select the employee and then Edit Employee. If you haven't added the employee's email address, add it now. You'll need it to invite them to QuickBooks Time. Then, check the box to invite this employee to track and record their hours with QuickBooks Time. When you're finished, select Done. Your employee will get an email inviting them to QuickBooks Time. They can either download the mobile app or sign in from a web browser. They can start tracking time right away by selecting Clock In. The clock will start recording their time. Once they're done, they select Clock Out. To view your employee's time, select the Time tab and launch QuickBooks Time. QuickBooks Time will open in a new browser tab. You can look at the Who's Working window to see who's on the clock, what they're working on, and where they're at. If you want to learn more about features like project tracking and geofencing in QuickBooks Time, check out the link at the end of this video. To approve time, select Payroll, select Approve Time, and then approve the time for each employee. Once you have approved all your employees' time, you are ready to run payroll. If you want more info on how to run payroll, check out the link at the end of this video. That's it. Now you're ready to start tracking your employees' hours with QuickBooks Time, so you can run an accurate payroll every time.
So easy, right? So These are some links that'll be here for you. So there's training webinars that you can attend that Intuit offers for free as well. There's training videos. It'll be just a lot of the links that I sent or that Karen will send you in that Word doc came from that training video. And then there's the community. That's kind of the end of what I had today. Here's my contact information, but I want to show you a couple things on the app. So give me just a second, and I'll put this back up in a minute too, but. Okay, so hopefully you're all seeing my phone. And yeah, I'm learning Spanish with my Duolingo. Barbara Gordon's playing. Okay, so this is the QuickBooks app, and we were asking about, like someone was asking about printing invoices. So you can actually make invoices from QuickBooks, and you can email them directly from the app on your phone. So this is a very real option, instead of having to have like remote printers, for example. The other thing that's here is you can snap a receipt. Let's see if I got something. Here I got my health insurance bill. So you can have your health insurance bill, for example, and you can take a picture of it, and then it's going to load it into a holding place within QuickBooks. So you can take pictures of receipts as you go throughout the month, and then it's going to hold them in a certain spot in QuickBooks, and I'll show you where that spot lives. Sorry, let me get back to you can look at your customer list here. So if you needed to add a new customer, you could definitely do it there as well. There's a mileage app, which we'll talk about in a minute. You can create estimates. You can create a bill. You can see your account activity. You can link bank accounts. You can see like what's going on with things. I actually don't have $4,000 worth of invoice. Surprisingly, it's the school. This like the shoemaker's kids. So my QuickBooks is still, look at my checking account, negative $1.1 million. So I use this QuickBooks Online to do payroll only for my staff. But so you can do all of these things within QuickBooks. But I wanted to show you this track trip. Sorry. Oh, for heaven's sakes. Sorry, I got to turn on some settings here. Okay. Really? I thought I turned it on. Did you not see me turn this on? Okay, that looks like it's on, right? Okay, you guys are just going to have to believe me that when you turn it on well, it'll follow you around about where you're going, and it'll track when you're driving, and then you can tell it where you were at. So it'll follow, it'll mark your phone. You can also manually add trips, and then what it does is it's going to record your mileage in the app. And it also will land in a place in QuickBooks as well. So there's some things that you can do with the app that I think are super handy, that would make it so that you could kind of streamline a little bit of things that are happening in your business. So I'm gonna show you both places where those things live. So when you're in QuickBooks under banking, your receipts are here. So when you take pictures of a receipt, it comes up in this screen here. You can also drag and drop things from QuickBooks into or from your computer into QuickBooks. Let me see if I can. So you can upload transactions as well. Like you can drag and drop things. You can upload things from Google Drive. You can set up an email address that's specific for QuickBooks, and then you can forward emails, but you have to be a user. So the email that you're forwarding to, you would create like a tanyasbills@intuit.com email. And then when you forward emails, the email address you're forwarding from has to be registered as a user with QuickBooks to make that work. But then what happens is it uploads your documents and then you get to see them here. The other thing, your mileage lives down here. And so when you go into the mileage section, anything that you entered, that you had it follow you around with the app, it's going to track that. And then you can see all of your trips down here. You can flag them for business or personal. And then you can add vehicle descriptions so that you have all the information that you need for your mileage deductions, which you saw was 65.5 cents now. So, okay. And then I'll put this back up. So if you guys have any questions, feel free to reach out. I'm happy to answer. I think that the information that's coming to you in that Word doc will be a great place to get started with how to link your bank accounts and how to set up from there. And then just remember, like, Google plain questions, just how you would like type it in an email if you were asking me, or how you would ask your friend or neighbor. So just keep that in mind. So QuickBooks is less, there's nothing you can do in QuickBooks that an accountant can't undo for you. So don't be afraid of it. So don't be afraid of your accounting. So you guys all got this far with your businesses. So like that's the hardest part. The accounting is nothing at this point. So Sharon asked, when tracking mileage, do you only track the distance to the location or the location and back? So mileage is to and from, except commuting miles. So if you're driving to your office from your house, that does not count. If you're driving from your office to a client's and then back to your office, that counts. If you're going from your house to your client and skipping the office, that might count. So it's kind of, John asked, is QuickBooks linked to credit union, specifically Navy Federal? I don't know specifically about Navy Federal, but yes, it does link to credit unions. Okay, let me know what else I can answer. Otherwise, I don't, Karen, do you want to say anything?
Hi, everyone. So this will be on our website by the end of today. If you have any questions, or if you did not get the second, what would you call that, study guide that I sent out before we started this, or during this, let me know. And I appreciate everyone being here. Tanya, thank you so much.
You're welcome so much. It was my pleasure.
All right. Well, I think that's it. Thank you, everyone. We'll see you at our next, check our calendar. We have a lot of good education coming up. So make sure you register, and we will see you later.
Thank you. Bye.
Bye. That was good.
Thanks. Have fun. I always have fun.
That was great. We really appreciate that.
Yeah, it's my pleasure.
All right. Cool.
All right. Take care.
Thanks. Bye-bye.
Bye.